Hey guys, welcome to my channel. So today we're going to be reviewing my M1 finance portfolio. I based it off of Joseph Carlson's, the one that he uploaded, so feel free to check out his channel. So yeah, let's get started. So far I only have $110 invested. I have two pie slices. The yield is 3.7, which is alright, but a lot of these stocks are dividend growth stocks, so dividend aristocrats, champions, kings, stuff like that. So I do expect this to go up. Basically, the goal of this portfolio is to invest in stocks that are going to be increasingly paying me more over time. So let's go ahead and passive income. So real estate is my biggest percent. Let's not do that right now. So real estate is my biggest percentage right now. Basically, I have basic companies, Maine, medical properties trust. A lot of these are like Joseph's. I just added PSEC, WSR, and one other, I can't remember. Oh, SPHD. And so basically the goal of this is just to start getting in revenue every month so that eventually I can lower this slice and I will start investing in other stocks that pay quarterly, annually, all that stuff. Let's go back. All right, so bonds. The reason why that these are weighted so heavily in my portfolio as well is that they pay monthly. So these are exactly like Joseph's, but I think I added B&D. That's the only one I changed. So for healthcare, I really like healthcare. I think this industry is not gonna go away anytime soon, obviously, especially with such a growing population, and it has such a high dividend yield, and all of these companies have been increasing their dividends year after year. So this is only gonna go up. And a lot of these are big companies that have been around for a long time, such as Johnson & Johnson. This slice I kind of left unchanged from Joseph's again, but a couple ones down the list I changed a lot. So utilities, again, just stocks that have been increasing their dividends. I really like Nextra Energy. That's probably my favorite because it's a clean energy stock, and I feel like that's going to have this is going to become a big industry in the coming years. So finance, this is another one is probably my favorite actually. It's because Warren Buffett really likes the business plan for insurance companies such as Old Republic, Aflac. I think RE is a insurance company. So, and then also, of course, banks give you good diversification. So, not a bad yield, and all of them have been increasing their dividends year after year. It's not a bad folder. Consumer, so this is the one I really edited from Joseph Carlson's. Basically, I just added a bunch of stocks that I see value in, and that are also a little risky. Like this MJ stock's a little risky. Tesla's a little risky right now. And then I added Churchill, Royal Caribbean. Besides those companies, basically every single one on here has been increasing its dividend. My favorite probably being Waste Management, SCI, and Costco. I also really like Nike. I think those are all solid companies. So now down to telecom. I only have two companies in here just because I don't really know a lot about this industry, but AT&T and Verizon, they're both huge in the United States. Verizon's not very diversified in their company, but they don't have debt like AT&T. AT&T is in massive debt, but they do have a very diversified company. So that's why I just have both of them. If one fails, at least I have the other one. But I don't see them going anywhere anytime soon. And AT&T has a plan to pay off their debt, so we'll see how that goes. Energy, this is one I really did edit from Joseph's. Just he had a lot of oil companies and stuff like that, but I don't really see that growing in the future very much. Especially, I really do think that we're going to have a huge shift towards clean energy. So this is just a bunch of clean energy stocks. TAN and FAN are both ETFs, and they don't have an increasing dividends that have been increasing every year, but they do have dividends but the rest of them, BEP, PBW, Nextra, PEGI, those have all been increasing their dividends. And yeah, I have this one in my portfolio twice, but I really like the stock, so it's all good. Down to industrials, I left this one pretty much the same as Joseph's. The main change is that I added this one just because 3MM, they're struggling because they need to adapt their company to keep up with the changes. I think they need to shift more to like an online kind of aspect, and so as long as they can do that, everything will be fine. But Honey has already done that, so that's why I added this one. Hopefully, if this one can prove that it's going to be sustainable in the future, I'll probably bump up the percentage, but we'll just see about that. Now down to tech. This is probably my least favorite folder just because I feel like I don't know how much more these companies are really going to grow, but I also don't see them going away anytime soon. So I just have Apple, Microsoft, and Visa. So back. So the reason why I haven't really invested that much into like Apple, Microsoft, and Visa is just because of my diversification ETFs. This is just a safety net for me, and it gives me broad exposure into the market. So I'll just give you a quick scan through. I really like SPHD. It's probably one of my favorite stocks just because it's an ETF and it pays monthly. Those are pretty hard to find, but Noble is another good one because it's full of dividend aristocrats. I think it's actively managed. I'm not really sure, but it does have a lot of stocks into the ETF. So basically, that's the goal of all of these. I do have certain stocks from each industry, but I did add the ETF that covers the entire industry just to be exposed. Just a safe way to do it. So yeah, that's my portfolio. I'm going to be updating it. Or posting updates on YouTube. So if you found this video interesting or you have any questions, feel free to comment. If you liked it, go ahead and like it, please, and then subscribe if you want to see more. So thanks for watching.